This year at the World Economic Forum annual meeting in Davos, PwC is launching their 22nd Global CEO Survey. Now, they've spoken to over 1,300 CEOs from around the world to see what priorities and challenges are on their minds for 2019. Now, I'm joined here by Bob Moritz, Global Chairman of PwC. Thank you so much for joining us today.
Happy to be here.
Let's kick it off. The title of the report is CEOs Curbed Confidence Spells Caution. That's just a fancy way of saying a lot more CEOs are worried and pessimistic about global economic growth in 2019.
Absolutely. So when you look at the results year on year, last year we had a record amount of increase in optimism, as well as a record level of optimism that came across the CEO survey. This year, actually, we had the exact opposite. We had an increase in the amount of pessimism, those that weren't confident about the economy itself, and we had a decrease in those that were very confident around the economy. So we had a polarization compared to where we were in the previous years. Not surprising when you look at all the different challenges and uncertainties that are out there that each of these CEOs is facing day in and day out and over the next 12 months.
But clearly there's been a huge shift in tone. So I'm wondering, from all the years that you've been doing the report, is this the most pessimistic report that you've seen?
We have to go back quite a bit to actually see this level of pessimism. You actually have to go back to 2011 and 2012. So it's been a long run here with this degree of optimism that we've had. Now let's remember where we came from in 2008, 9, and 10 coming out of the financial crisis. So you've had a tremendous uptick in terms of the confidence of the CEOs, the lack of major issues that have gotten in the way of growth, as well as the GDP stability that's been out there. Again, depending on where you come from, there's a relativity aspect to it. But nonetheless, they've had a high to ride that wave for quite a while now. Another question is, what do I do next? And
to put it into perspective, I mean, 1 in 3 CEOs actually see a decline in economic growth. And this year, compared to last year, it's a 436% increase. I mean, explain me these numbers. What is driving this pessimism?
Well, it's clear when you look out, they see a tremendous amount of uncertainty and a tremendous amount of threats or risks that are sitting there.
But why more uncertainty?
So today you've got a whole bunch of different things that are hitting them all at the same time. If you were to look in previous years, for example, last year's survey, you'd see a number of key risks that they're worried about, but there was a concentration. 40 some odd percent were worried about overregulation, 40% were worried about cyber, etc. Today, actually the percentage that go to those risks and others has actually come down. But the disparity and the breadth of the issues are much different than before. So specifically what is different this time around is the things that are more local to them specifically in their home countries and or outside of the control and mostly in the control of our governments. Overregulation clearly continues to be number one, but the issues around just policy effects. Think about the UK and Brexit and the implications to the rest of the world. The issues of geopolitics, which then leads into the trade conflicts between the U.S. and China, as well as many other countries that are trying to move forward and avoid barriers. So these amount of risks are continuing to increase time and time again, and they're somewhat out of their control.
Now, you mentioned Brexit as well, and I wonder, does this report really factor into how much drama we have seen at the turn of 2019, with Theresa May also facing a historic parliamentary loss? I mean, were these risks and worries also factored into the report?
So actually the effects of the last 2 months in particular are not factored into the report, because this report actually did a survey prior to all the latest that we've had to deal with in terms of the ups and downs, both in terms of the vote of confidence on Theresa May as well as the vote on Brexit in itself in terms of where it was going to go. So actually you can look and surmise that the amount of pessimism actually might be increasing. Now you add on 2 other events. You had today the IMF actually releasing results in terms of its prediction for GDP growth. It was down slightly, but nonetheless down. And you did have, again, China come out with a growth rate today that was at about 6.4 or 6.6%, which is the lowest they've had in a quarter of a century. So again, when you look at these factors, there's more that's piling on and another straw on the camel's back that they're worried about.
So really, if you had done the report right about now, we would be seeing levels maybe 5 times of last year.
Yeah, I can't predict the levels because, again, this level of pessimism that's there right now is a dramatic increase year over year. But you also, interestingly enough, had a bunch of CEOs thinking about, hey, I think actually I see a positive in the economy. So if you go to some of the locations around the world and look at the CEOs in China, they see it as a positive in terms of what they do. The reason they see that is there's a huge market with 1 billion plus people, still growing at 6 point something percent. So there's a lot of upside for them as they look at the GDP growth that might happen around the world. But it's how do they execute and grab that?
Well, I'm curious to know, from your standpoint, you release this report every single year at the World Economic Forum, and I wonder, you outline the problems, you know what problems are dominating CEOs' minds, but what really changes? Just because we know what is going wrong.
Yeah, so I think there's two things to think about when you look at the data we've got. Number one is that level of uncertainty and their concerns, both about GDP as well as their own revenues, are in fact a good predictor of GDP growth. We've seen that correlation over the last 20 some odd years. And unfortunately, they may be a great predictor of the future. So the question is, what does countries do and what do business do? So in this case, we would say for business, number one, they've got to do a lot more scenario planning. These uncertainties are going to continue to rise. They're not going to go away. And you can't literally plan for a budget for the next year or two or three or four. So you actually do a lot more scenario planning, and you have to get your institution or your organization fit for purpose, meaning you've got to be able to move with speed. You've got to be able to react, and there is a first mover advantage, because if we don't know where Brexit goes, one day it may go out on a soft landing, another day it may be hard. Who knows what really will happen? Okay. But we got to move with speed when it does happen.
But going to this, back to this idea of the report, you obviously spend a lot of money talking to these 1,000 plus CEOs. I mean, they look at this report. Do you think they actually act on it?
Oh, absolutely. So the two big themes that come through here are one around talent as being another big risk, and the second one being about technology and specifically artificial intelligence as themes that have come through the results. And here specifically, there are actions that are being taken. So if you look at the talent skill gap that's missing right now, or the scarcity of talent, they are acting. What are they doing? Many of them, the majority of them, are actually going after upskilling in their own institutions. So they are putting programs in place to not wait for the country or the education system to help provide the training. They're doing it themselves in lieu of what a country or the education system may do. In the case of growth, the other change that they've done is they historically have invested very broadly across the globe. There is a retrenchment now that's happening. I'm going to reduce my foreign investment perhaps in other countries. I'm going to limit the number of countries, and I'm going to be very organically focused. I'm not going to do as much M&A. I'm going to be closer to home or in the region. And yeah, I may adjust my supply chains as well.
That's a case that we're seeing with China, correct?
Absolutely.
I mean, they're looking away from the US in terms of growth markets.
Absolutely. China was probably the number one country in terms of the CEOs that we're talking to that said, I am absolutely changing my supply chain. I'm going to change where I invest and what I do. To give you a very specific example, we asked the CEOs, other than your home country, what are the top 3 countries you will invest in as you look forward to 19? China last year had US number 1. US is no longer number 1 with the trade conflicts. What is number 1? Australia. Australia was not even on the top 10 list last year, but they see an ease of doing business with Australia that will actually curtail and have an opportunity for them to take advantage of. Now the question becomes, how does Australia as a country actually be better and easier to gain and maybe fill the gap or the void that maybe some of these large countries are actually filling? So there's an action and a reaction from the business community. There needs to be an equal reaction or action from the political and government officials to make their countries fit for purpose going forward.
Now, just to sum up, I mean, from 2018, terrorism and climate change were kind of the headlines or the key threats. This year, it's more about trade and more about protection, the rise of protectionism. I mean, looking at trade, should CEOs treat these ping pong of trade threats as just background noise, or should they be actually overhauling their business models?
They should be overhauling their business models, because I think there's a reality now in terms of what in fact do I need to do to manage, again, with a speed element to it. How do I adjust accordingly? So again, let me go to a couple of specific countries. CEOs in China again, 62% of them are actually changing their supply chains to react to exactly these trade conflicts. And while we may hope that they may get resolved over the next few weeks or months, I don't think we can bank on it. The long-term issues, the mega trends that we're dealing with right now, point to the fact that there probably will be more conflicts as we have a scarcity of resources, as we have a shifting of the markets and the capital markets from west to east, when we see the rise in the demographic benefit that's coming from Asia in particular. So there are things that are underlying all of these issues that are real and are going to be here for a while longer.
But you said that we cannot bank on a resolution to come. I mean, for businesses, some are worried that if they overhaul their business model now, it's way too early, and maybe they will not see the benefits come out in the long term.
Yeah, and what those CEOs are doing, again, like I said, some are definitely acting, some are scenario planning and being prepared to act, but again, be ready to move with speed. So the other thing that they're trying to do is, how can I get my institution ready to move with that speed? Am I as simple as I need to be? Am I aligned as I need to be? And can I scale the change that I'm going to put in place effectively so I can capitalize on a first mover advantage? And that's another element of change management the CEOs are taking in place right now, because they know they've got to move and take advantage of the opportunities in front of them, whatever they may be.
Now, we are at Davos right now, and it's really interesting because the report for the first time this year has actually included a section dedicated towards Switzerland. And what they found is that for us, over-regulation is going to be the headline topic for 2019. That's going to be the main concern. I mean, how are people supposed to, or CEOs supposed to navigate that?
Well, I think in the case of regulation, and specifically Switzerland was one of the countries, there were a few that had number one issue and threat that they were worried about was being regulation. There's a couple things that has to happen. Number one, if you're a business, you have to be thinking about three elements of regulation. How do I comply most effectively and efficiently with the regulations I have today? How do I make sure I'm prepared for any new regulations that may be coming? And equally, maybe I'm going to argue more importantly, how do I deal with old regulations newly interpreted? And what I mean by that is we've got a set of rules on the books today that organizations have been following for many years. The public sentiment changes, the political sentiment changes, and perhaps the regulatory sentiment changes. And what you thought was compliant previously might not be today. So you got to be thinking about all three elements of that. And it's a very important part as you look around the world right now.
Just because Swiss companies follow the rule book doesn't mean that they can stay innovative then.
Oh no, look, you've got to be smart in terms of how do you leverage technology and data to do a better job with regulatory compliance. So countries that and companies that are good at innovation are actually saying, I've got this regulation, can I turn it into a competitive advantage because I can do it more effectively and efficiently compared to other institutions? And you've got a number of different Swiss entities and some of the sectors there that do a decent job of that kind of stuff. So they're going to have to make sure that they are as effective and efficient as possible in leveraging innovation, technology, and data in much different ways to deal with compliance of new as well as old regulation.
And maybe I'm going to be putting you on the spot here, but in Switzerland, actually nearly half of the CEOs that you talked to, around 30, expected a downturn in global economic growth this year. So why do you think that we're more of a pessimistic bunch?
So when you look at the results from Switzerland, there's a couple things that come through. First, like you said, that level of pessimism. Unfortunately, because of the type of institutions that are sitting in Switzerland that have a very much global reach, when you look at some of the large pharma institutions or perhaps some of the large financial institutions, there's a big impact in terms of the globalization or perhaps some of the rules and regulations that come. So that's point number one. Point number two is, what is the impact on the EU Brexit situation to those Swiss companies right now? The access to resources, the trade agreements, everything else that's out there has got to be another level of uncertainty that causes that pessimism. The last piece is actually access to key talent and the implications on technology. What was interesting as well with the Swiss was that the results in terms of how big do you think the impact of artificial intelligence will be was relatively low compared to the environment globally. So again, the question is, will organizations in Switzerland, will the Swiss governments actually do more to adopt progressively artificial intelligence and elements of technology changes that actually benefit the country to its citizens, but also the companies that they're operating in?
Well, the situation with artificial intelligence that we find ourselves in is that people recognize the impact that it's going to have in the long term, but many companies are just sitting back.
Yeah, it's a scary thought.
Why the hesitation?
It's a scary thought right now, and I would surmise, and this is speculative because we didn't ask the question, but you have a 60-some-odd% of the CEOs saying it's going to be bigger than the internet itself. And again, let's define artificial intelligence, the ability to gain access to data, simulate it, actually think it through in terms of what it means, and then actually spit it out so it actually allows for people to do something different. The problem is the CEOs have not done stuff holistically or systematically in their institutions. Now, one of two things are happening. Either the artificial intelligence is being used in business units or locations, but it's not scaled to the level of the CEO's attention or programmatically across the entire organization. And that's where the benefit comes, when you can scale the technology changes. The second thing here is some things are happening right now where you are using artificial intelligence, but the public at large and even the CEOs might not even know about it. They're getting reports where artificial intelligence is there.
And sometimes they jump on this bandwagon because they feel that they need to be on
Absolutely.
it without understanding whether it's actually critical to their business model.
Yeah, absolutely. And that's where, if you look at another part of the survey, what's interesting is the gap in terms of CEOs' belief that they have the right data is also a gap that hasn't been closed in the last 10 years. So while you've got a tremendous amount of technology, a tremendous amount of data, you haven't closed the gap of the kind of information the CEO needs to manage. And that goes back over the last 10 years. Now, what's happening there? Number one, the expectation of the CEOs has increased dramatically. There's all this potential for how do I use technology and data and artificial intelligence to manage my business differently. So they see the future potential, but not necessarily grounded in reality today. But and that becomes a problem.
Let's be clear. I mean, the data, they have enough data, but whether that data is valuable data or how they can use that data, that's the bigger question.
I think you have a couple of questions with respect to data. First, there's just an enormity of it. And the problem right now is how do I synthesize it to become information I can act on, to your point. The second thing is, what's the quality of the data? I can get a lot of good data. The question is it meaningful for my business, its strategy, and the execution of that strategy? And third is, am I taking the data I have, coupled with third-party data, other data, to really make sure I'm taking an outside-in view rather than an inside-out view? What I mean by that, if you listen too much to your own data, you actually might find yourself in harm's way because you're listening to yourself in your own echo chamber too much. So we've got to be smart about the kind of data that I gather. How do I synthesize it into information, and how do I execute better and more effectively and efficiently going forward?
You mentioned earlier as well the talent and skills gap. I mean, do you think that there's too much chatter about reskilling, but there's not enough being done by CEOs internally?
So we actually find that CEOs around the world are starting to do more in that regard. The thing I would make sure we focus on is there's a reskilling of the employees en masse, as well as the future employees that they want to hire. So it does require you to go to the education system to almost demand what are the kind of core competencies we want in grade school and middle schools and higher education. Second, in lieu of what the education system does, what do I do myself? And that's what we are seeing CEOs spend a lot more time, money, and investment to upskill their people. There's another piece to this though, which is, am I actually upskilling my senior management teams? How can I actually lead the change to take advantage of technology, artificial intelligence, and the like, if I don't have leaders that understand it? And that becomes a problem. So you've got to be thinking about talent from multiple angles and the kind of skills that are needed to do it, but also lead the change
So
that's
that's actually where you see the biggest room for improvement.
Absolutely.
At top.
Yeah, because look, if you're an organization, you probably have a number of 20-year-olds that have lived in the world of the internet, lived in the area of different technologies, and lived in different kind of techniques to code and create applications themselves. What you have is a number of senior executives that have not lived in that world. They don't know the art of the possible. So is that a threat or an opportunity? If you create the right environment, that becomes a huge opportunity.
You're a part of this C-suite.
Absolutely.
So what reskilling do you need to do? What have
So-
you found to be a common skill that needs to be done among CEOs?
Actually, I would say we have done three things as an institution across the world. We're looking to upskill our people across the board. That goes to the most senior leadership down to the first year hire. And the way we do that is a combination of on-the-job training, self-study, and just-in-time study that we literally bring through almost on their computers with just-in-time learning.
Can you give some specific skills?
Yeah, specifically. So when you think about some of the techniques in terms of some of the specific coding languages that are available right now, giving your people the skills to code on those particular techniques is huge because they can create their own applications right now. So how do we assess knowledge and data when we go do an audit? How do we do a much better job in synthesizing information for purpose of an M&A strategy conversation? What used to take 6 weeks in a supply chain analysis now takes literally 6 hours because we can gather data, bring it into an app that our teams have created because they have new skills and new knowledge, and then turn that more effectively and efficiently into real valuable insights for institutions to change. So that skilling is hugely important. The second thing that's important is how do you create the right environment for innovation? I would tell you from our perspective, people question, do I have enough innovation going on right now? I'm going to argue there's a lot of innovation happening in companies. The problem is, can I scale it? I've got a lot of pilots, I got a lot of tests going on, I got a lot of experiments going on. But once something works, how do I scale that effectively and efficiently through the organization to really take advantage of the opportunity and put me in front of the competition? And that's the challenge. So it's, yes, upskilling, but it's cultural change and leadership challenges to take advantage of these opportunities and embed them into what we do each and every day, and embed them in what we do with my supply chain as well as my consumers.
This is tied very closely to this year's theme at the World Economic Forum. So what is your interpretation of mastering the fourth industrial revolution? How far away from that do you think we are?
I think it very much depends on the companies that we talk about. You've got institutions that acknowledge that future change and the possible implications and are very active in bringing in the right talent to think differently than ever before, to upskill their people, and to go buy or leverage IP in new and different ways rather than just bring in pairs of hands. They are being challenged by other sectors that they have historically not tapped into to understand what the world looking forward looks like. So when I think about a pharmaceutical company, for example, how do I bring in retail, technology, and financial institutions, not just think about it from a pharmaceutical or a healthcare perspective? And that thinking broadens their perspective. So some institutions are doing a great job getting ready for this. Others are still falling behind, and I think we're going to see more winners and losers with a great divide when we look ahead.
You've been at the World Economic Forum for about 11 or 12 years by now, and there's been criticism about the WEF that there's been too much deal-making, business talks on the sidelines, but not so much about achieving the theme of and discussions and panels. From your experience, has that been the case?
Well, I think we actually have to dissect what I'll call the panel conversations to what happens that the WEF enables afterwards. We tend to focus just on the 4 or 5 days that we're here in Davos. So the WEF actually has done a decent job of actually getting out there into the field at regional meetings and other things, working with elected officials and business community leaders to affect some additional changes. Now, I'd say the biggest thing for us to be focused on right now is how do we actually affect change that benefits a larger mass of people? The problem has also always been this issue of inclusivity versus siloing the behaviors and the benefits that come.
But if everyone spent all that time, instead of doing business, to actually participating in the discussions, wouldn't you see a more fruitful impact from that?
No, I'm going to challenge you respectfully, which is actually business can do business and do good for these things to come together. So I think there's an opportunity for the business to do a better job of talking about when we do business, there's a positive impact on the economy. There's a positive impact on the workforce. There's a positive impact on the country and the economy if we do it right. And we all know this from academic studies. So for example, if you bring more women into the workforce, bring more women into the consumption area, that's a huge economic opportunity for our country. It's a huge economic opportunity and a brand opportunity for the company that does that well also. So I think if we can get business to be more focused on not just doing the bottom line business, but having an impact on society at large, and we talk more about it, I think we'll be much better off.
And maybe just a quick question to finish up. I mean, we're at the Davos this year, but if you could suggest a name for next year's conference, what would that be? What do you think are issues that need to be brought to the forefront?
So there's many issues to be at the forefront. I'm actually not going to go with a name of an issue. I'm going to go with execution and impact. I think we've got to actually translate the great discussions that do happen here into action, reaction, and impact. And the more we get to impact, the better off I think we'll be.
Okay, Mr. Moritz, thank you very much.
Thank you.
Thanks.